What is up, guys? Dirk here. In this video, I want to share with you one of my favorite trade setups that has a really good risk-reward setup. So when you're right, you make crazy ROI, and when you're wrong, you only lose the 1%. So this is something that I personally use for day trading, but it also works on all time frames. So whether you're looking on the 1 minute chart or the 4 hourly or the daily chart, whether you're trading with leverage or you're trading with spot positions, this is something that works beautifully when it works. So let me break it down for you. Before we get into it, make sure you subscribe to the channel down below if you're not yet subscribed. Smash the like button, leave a comment down below if you have any questions. And personally, for all my trading, whether it's futures or spot trading, I use BYBIT. So if you are looking for an exchange to trade crypto on, whether it be spot or leverage trading, use the link in my description down below. Sign up through my referral link and you will be eligible for up to $30,000 in deposit bonuses, as well as other prizes and bonuses. You'll be able to compete in competitions that I hold for my referrals only, and so on and so forth. So if you're looking for a crypto exchange, sign up through the link below for BYBIT for crypto and futures trading. Alright, so the example that I have here in front of us is a recent trade that worked out very, very well. It is on Bitcoin, and this is the 1 minute chart. So if you're wondering, yeah, that's crazy, how can you look at 1 minute charts? Keep in mind, 1 minute time frame or 15 minutes or 1 hour or 4 hour, that's all the same data. It's just presented to you differently. On a 1 minute chart, it just means it draws a candle every single minute of the price action. A 15-minute chart, it draws one every 15 minutes. On a 1 hour, on a daily, and so on and so forth. So if you are doing any sort of day trading, then personally, I look at a lower time frame charts. Okay, I'm looking at the 15-minute, the 5-minute, the 1 minute chart, because it just gives you better precision. It gives you better entry possibilities because you see what's developing right in front of you as you're watching the chart. But this same concept works on all time frames. Like I said, it works on a 4 hourly chart. So if you're looking to trade over hours or days, look on the 4 hourly chart. If you're looking to trade days or weeks, look on the daily chart. This kind of setup works often. And when it does, it works very, very nicely. Okay, so what it is here in this case, we have this drop. It creates a low. Okay, as any drop does, eventually it exhausts. So it falls all the way back down. And after that final exhaustion, whenever it comes, just be patient, let it exhaust. It creates an automatic reaction. Okay, so you get that initial rebound purely as a reaction from shorts closing. And there's no more selling pressure, and it just bounces, and then people hop on the long train and it goes higher. And then what it creates is this range. Okay, so from the low to the high. And you know, I have tutorials here on the channel about range trading. That is also very profitable, but that is not what this specific setup is about. This specific setup is simply the Fibonacci golden pocket. So we take the Fibonacci tool, we put it from the low to the high that it's created after this automatic rally when it starts going down. And now what we're looking for is we're looking for a good entry. So I've customized the Fibonacci tool here to show only the 0.618 to the 0.65 zone. This is known as the golden pocket ratio. And it's very simple. That's all. I don't want to see the 0.5. I don't want to see the other ones. Just this type of setup alone. If you wait for it to play out, this can just be your entire strategy. Keep in mind, with trading, you don't need gazillion indicators. You don't need thousands of strategies. All that you need is just one strategy or one setup that you can repeat over and over again, that you know has a high win rate, where you know you're profitable, and you simply only wait for that setup, and in between you don't trade. So you can see what we're looking for is we're looking for a drop into the Fibonacci golden pocket zone. And while it's ranging over here, a lot of people will get chopped up once again while it's moving here. So they'll try and long it here, they'll try and long it here, try and long it here, try and long it here, it goes up, they'll try and long it here, and it goes down. We are simply not trading anything in this zone over here. We are waiting for a drop here into this Fibonacci golden pocket zone. Now, what we need to watch out for is that, of course, there is the potential that it does continue lower, and sometimes it does this. So we have to wait for confirmation first. We want a drop into that, and we can't just blindly long it. And this is why I really like to look on the 1 minute chart for these types of entries, because every single candlestick gives you 1 minute at a time, and you can see much better what the reaction is rather than having to wait 15 minutes or 30 minutes or an hour for the candle to confirm. Okay, so I do like these for entries, and you can even turn this 1 minute entry as a scalp. You can let it run into a swing trade. We can talk about that a bit more in a second. So what we're getting here, and I'll actually replay this for you in real time, we're looking for a drop into it and a reaction. And on that reaction, on that bounce, we can take a long position with a stop just a little bit below that or at the low over there. And what we are targeting is quite simply this high, because the idea is it's a drop, an automatic reaction, a drop into the Fib golden pocket, and a continuation higher. Okay, that is the idea behind this setup. So we wait here, and you can see over here that when we take this entry, that's a 1-to-7 risk reward, which is really, really, really nice. Because what it means is when you're wrong, you're losing 1 unit. When you're right, you're making 7 units. So 1 unit should be about 1% when you're doing any sort of day trading. So if you have a $10,000 account, you're risking $100 to make $700. If you're trading with a $100,000 account, you're risking $1,000 to make $7,000. And this risk reward setup is so nice because it basically means that you can take it 7 times, and even if you're wrong 5 out of 7 times, you're still profitable, right? And usually you won't be wrong 5 out of 7 times. If you wait for the confirmation, you wait for the bounce, it's usually a pretty good risk reward setup, and it is usually pretty profitable percentage-wise. Okay, so this is a setup that just works over and over again. As you can see, it had this strong reaction over here. It didn't quite take it, but we left the stop here, and when it's over here, if you want, you can move the stop to break even to remove any risk whatsoever. But you can see it chopped up, and eventually it hit this level, and actually it continued a lot higher. And this is what we mean. We want the drop, the reaction, the drop into the Fib golden pocket, and then the continuation, which we have seen over here. So this is a very, very nice trade setup. What I want to do for you now is I just want to run it in the replay mode so that I'll walk you through it, and then you can just take this and practice it, okay? Try it out on different pairs, right? Doesn't have to be Bitcoin, it can be Ethereum, it can be anything else that you like to trade. Doesn't have to be the 1 minute. You can try it out on the hourly, on the 4 hourly, on the daily. Play around with this Fibonacci golden pocket tool, set those retracements, and you'll see that it works quite a bit, okay? And if you only look for this setup and you're just patient, okay, that's all you need to be with trading. One setup that's repeatable over and over, that has a high hit rate, high risk reward setup, you can make a lot of money, because a lot of people get chopped up trying to overtrade and trading other things. If you're looking for this setup, only this setup over and over again, it works, okay? In the same way that the range trading setup works over and over again, you just have to be patient for it to play out, and then you take it like a sniper, okay? We're not looking to just throw darts at a dartboard and blindfolded throw stuff at the wall and see what sticks. We're looking for that one specific trade setup, sit there with a sniper. Once it comes, we hit the entry, and that's it. One good trade. You need 1 of these a week, and you're doing great. If you get a 5 to 7 R once a month, that's already incredibly good. If you can do that consistently, even 1 trade a month is already great. If you can do more than 1 a month, it's even better. But you gotta be patient, you gotta wait for the setup to play out. So let me run you through the replay to show you how it's done. Okay, so we're letting it play out here on the 1 minute chart. You can see it's still dropping, so there's nothing really going on here. Let it do its thing. Okay, now we're starting to see a bounce here, and you can see over here what we have already. Let me pause this. Is now we're getting a break in market structure. Okay, so you can see this high over here. That got broken, we went above it. So now the trend has changed, because while it's still dropping, you can see it just keeps making lower highs all the time. Now we're making higher highs, okay? So we're using this as the low, and now we get these automatic reaction, and we let that play out. There's nothing that we need to do at this point. We just need to let it play out, okay? So let it do its thing. It's just bouncing now. Likely the low is in, and you can see at some point it's also just gonna fizzle out. So let it do its thing. Okay, so at this point, we can actually start to consider that maybe this is what we're looking for. And the reason for that is in the same way as we broke the market structure here. You can see on the way up, we just keep making higher lows. So the trend is still up until we get a break in market structure, okay? And you can see that occurred over here. We finally got that break over here also in the market structure. And here, we can start to look at, okay, let's just put a Fibonacci retracement on here with the tool, the golden pocket zone, and we're gonna see what happens. We're not planning on taking any trades, so even if it continues higher at this point, well then we just continue to monitor and then we don't use this range obviously. But for now, we can say, okay, low to high, market structure break, and let's see what happens here. As long as it doesn't get above here, we are looking for a drop into this Fibonacci golden pocket zone for a potential long entry and a continuation. So let's let it play out. So you can see over here, it's still going along, and at this point, we definitely have market structure break, okay? You can see this low is lower than here. So this uptrend has been broken. You can usually see by the wick like this, the swing failure pattern, if you want to call it that. So now we are still waiting. We're not looking to enter. And this is where it gets tricky, where a lot of people kind of get trapped, because you can see on the 1 minute, if you're watching this and it makes these wicks to the downside, it looks like it might want to continue going higher here, but that is usually a trap. So we're not looking to long anything unless it gets to this Fibonacci golden pocket level, okay? Right now the trend is still down, so let it play out, and let's just simply be patient and wait to see if it actually gets to that Fibonacci golden pocket. So you can see even at this point, we've had this drop over here, but we're still not into the Fibonacci golden pocket. And even though it bounced over here and you feel you might miss it, that's always deceptive, because now a lot of people feel like, okay, it's going back up again and we're gonna long over here. But again, that is going to be deceptive, because look what is going to happen. It just drops, you know, it keeps going here and then think, oh, it's going up. Nope, we still haven't dropped into the Fibonacci golden pocket. So you can see that drop is over here. And if you would have FOMO'd in over here with a long expectation, probably get liquidated over here. So now things are starting to get interesting. We're approaching it, okay? And you can see this is why I like the 1 minute chart, because things happen. You can see it 1 minute at a time. You can see it developing over here. And here it still has not touched it. Usually this is very exact. We want a hit of at least the 0.618, right? Very precise. If it doesn't get there, it means it is not yet complete, and we are looking for that entry. That is a requirement of this trade, okay? So we let it play out. Okay, so we're letting it play out. We're waiting for a hit of that Fibonacci golden pocket. It is usually very exact. So there we go. Okay, so as this is happening on the 1 minute chart, we got the drop of it. Okay, and what we're looking for here is we're looking for a bounce, because we don't know at this point if it's in real time. Obviously, if we don't know what's going to happen, we don't know if it's just going to continue dropping and continue going down. That is a possibility. So we're looking for a hit here and a bounce, and even if it wicks below it a little bit, that is okay, but we need that bounce above it. Okay, so you can see over here we got the bounce over here, and if you look in, you zoom in into that candle on the 1 minute, you can see over here that is a nice candle. It was just a wick here and it pulled back above it. And at this point we can say like, okay, well, we are expecting more upside based on the higher time frame chart, so let's take a long position over here, even if we get in over here. Right? It's not the exact wick low, we can't time that because we waited for that bounce. Okay, so we're going to put the stop a little bit below that wick. It usually ends up working out, and the target is the high over there, and we can put it a little bit shy of the wick to make sure that it does get hit. So you can see over here that is a 1 to 6. You can make the stop a little bit tighter. That's how it was in the example that I showed you, almost 1 to 7, but you can see over here 1 to 6.5. So this is good. Let's see if this continues to work out as it is. We got the requirement over here, and let's see if our stop is going to hold. So you can see we get this immediate reaction here to the upside, and it's instantly profitable. You can see how quickly that went. You can see over here we're already at a plus like 3R, 3.5R, very, very quickly in a matter of minutes. That is why I like this 1 minute time frame. Okay, and now at this point when it's up here, we can decide, you know, do we want to take it early? Do we want to take our profit at 2 or 3R and lock that in, which is still a phenomenal trade already? Or, you know, are we confident enough that it is going to take out this high, which usually is the objective? There's never any guarantees, but that is the objective. At this point, we can also say, well, we're just going to move our stop to break even. So the worst that could happen is we get stopped out and make no profit, but we have no loss too, right? So it's basically a free ride where you can choose to have either maybe like a 3R, or you can have a 6 or a 7R if it does work out. So let's just continue to ride this out, and you can see what happens here, how this plays out, and just chops around for a bit, obviously sucking in more people who are trying to long this or trying to short this in the middle, and who usually get chopped up all the way. But as you can see, the stop is holding, right? And even though it pulls back in between, that is just part of the trading motion, and we are still targeting that wick high over there. So let it play out, let it continue. If we move the stop to break even, we're completely safe here. There's no reason to panic at all, because the worst that could happen is we could just get stopped out and then we just look for the next setup, but we wouldn't have taken a loss. Okay, so we just let this play out for now. And you can see, there we go, that little wick just above this high. That is all that it took. That was the objective. Okay, and that's why I say put it a little bit tighter, a little bit closer before it, because sometimes on different exchanges you don't want to be too precise and too greedy, putting it a little bit too high, because it might not hit it on your leveraged exchange, and then that is obviously very bitter if you miss it by like $1 or whatever. So just always try and be a little bit more conservative. That's what I like to do, and it works well for me. So here in this case, that's a 6.5R. You saw me break it down before in hindsight on the chart. You saw me break it down here live on the replay in front of you, and that's basically just how the setup works. Go and play around with this, test it out. It works on scalping on 1 minute charts, works on 15-minute, 4 hourly, daily, weekly. Obviously the longer the time frame, the longer it takes for the setup to play out, but in my opinion, when this works, it is a very, very clear and easy and beautiful, profitable trade setup. So if you enjoyed this video, make sure to smash the like button, leave a comment if you have any questions about this type of method. And like I said, if you're looking to trade somewhere, personally, I use BYBIT for spot and for leverage trading. So if you use my link in the description down below, you get the best bonus deal up to $30,000 in deposit bonuses. You'll also be able to participate in my own trading competitions that I hold for my referrals, so people who signed up through my link. And just in general, in my opinion, it's a good platform to trade on. It's got a great mobile app. So click the link in the description down below if you don't yet have a BYBIT account, and create that account. Thanks for watching, guys. Safe trading, and I'll see you in the next video.